Okay, can see your charts, and we're recording. So let's get going. So talk me through right from the beginning. Then what the plan is here.
Okay, so as I was just going through on the daily charts.
Yeah.
The occurrences, they did happen, but they were just like maybe like once a year at most. Sometimes like a couple of years in between. So I started looking just on the 4 hour to see like if they like were a little bit more frequent. And just off like the euro, pretty much the last 2 years, looks like they were occurring like about 8 to 10 a year, is what I'm seeing so far on there.
Okay.
But also just been monitoring this setup on USD yen. Actually just got an entry with the outside bar.
Nice.
At the 27.2.
Yeah.
Now remember that we weren't that you were going to think about if the average daily range can even go back in time. But also, like, I'm just curious with on the 4 hour, if I would even be still using the full amount of the ADR since I'm on a smaller time frame.
So yeah, how in principle how that would work is that the time frame is the ADR isn't time frame dependent as such. What we're looking at with the ADR is a fixed period of time, which is the daily range. So whatever increment of the daily range you're looking at doesn't actually factor into whether or not we're going to trade the range or we're going to exceed the range, because the range is set by the 24-hour period. So you could be looking at a 1 minute chart, and once price exceeds the daily range, then it's especially, well, prior to the expansion that we've seen this week, it's liable to at least stall, if not correct, once it makes an incremental move past the daily range.
Okay, cool. Well, I still don't have that indicator, so I would need that.
Yeah.
And then my other idea, like I know, like when you were saying, like you just did it 2 times that to set your target, but when I was going back on the euro, it just seemed like on a lot of the occasions that it played out, especially when it was at the 27.2, that it would often come back and test the 23.6 of the same, like here. Like for example, 27.2 with the divergence comes down pretty close to the 23.
Yeah.
Like, and then also, this is a little bit of a tangent, but I was seeing, I think it was Neville's strategy, or a lot of times that 3 times test happens.
Yep.
So I mean those could just be opportunities to enter again. I don't know how we would play that in the future, but that's something that I've noticed has happened. Not always 3 times, but occasionally like twice. It'll retest a level.
Yeah.
But yeah, like here, 27.2 came down and hit the 23.6.
Yeah.
Spot on, shot up. When it hits a 61.8, I've found it usually is coming back to test the 0 line.
Yeah.
For example, here after that pin bar. So I don't know. As far as like, maybe when I'm back testing to like compare like that the 2 times the ADR versus the levels, because I mean here it tested between the 27.2 and the 61, had the pin bar, came down to the 23.6. So it just seems that those levels, and even though this is a really small sample, have been pretty reliable.
They are. There's a lot of algorithmic coding, especially metadata coding, so whereby banks are taking huge chunks of data. There is a mathematical calculation that means that this 0.272 level is often influential within trading programs.
Mm.
So this is why you will regularly see this 0.272 act as either a magnet or an inflection point, because a lot of near-term algorithmic programming is done based upon that expansion level.
Okay.
So it's a good one to watch. Okay, so just walk me back through. Is this the euro we're looking at now? If you just go back to your first example, and let's just walk through them and see how we're looking.
Okay. Turn this off. But yeah, right now I've pretty much only been doing one swing at a time, so I won't ever like go from like the very low to the very high. Like for example, on the yen, there's an example. So on this one, I drew here, and then comes up, tests the 27.2 area.
Yeah.
With a divergence. On that example, there wasn't really a good candlestick entry to get in on that level, so I would have had to pass.
Yeah.
Retest the level with a high and a second divergence right here. Let's see. I didn't necessarily look for the entries at this point.
Sure.
But yeah, again, I feel like looking now, this candle possibly could have been my entry 10 pips below or on this. Down, and then third entry could have been over here, but not really a good candlestick entry, so would have just stuck here.
Yeah, I mean, one of the things you will find with the 4 hour as well, Brandon, and this is why I counsel people a bit against initially getting into the intraday stuff, is that once you get an entry on the 4 hour, again, due to the proliferation of algorithmic programs, where a bar immediately stands out, like the one you've just pointed out there, that big bearish bar, you will find that it will break, so the trade will start to move in your favor, and it will immediately get retested. Especially, you can see there, it pops straight back to the entry level and then obviously sells off again. So this is something you would need to factor with respect to your risk management strategy, because if you're going to look to move, get your stocks to break even as quickly as possible and look for a momentum follow through to play, then we'll have to look at more data, but my sense is from experience that this will be frustrating because there'll be a lot of scratch trades, which is fine. Okay. That's still an absolutely valid approach, and you can sit through a whole bunch of scratch trades, a couple of losers, and then hit a couple of 3-baggers, and that's a great strategy. But from a mental and psychological perspective, you need to set yourself up from the get-go that that's how your trading is going to play out. And some people are comfortable with that. Other people, the frustration gets too much and they start to make errors in execution, because they'll either chase a market, they'll start moving stops, or they won't adhere to to their trading plan, and that's where that type of thing comes undone.
Yeah, I was thinking about that as well. But I think partly because it's not my money, I don't plan to mess around with this at all.
Sure,
it's not a joke,
Yeah.
So I don't I wouldn't re-enter bad trades, especially because you're going to ask me about every trade I enter every week.
Yeah.
It's why? That's ridiculous. But yeah, I have seen that, and also on the the pound. Yeah, I've noticed that sometimes the candles will span 2 levels at a time. So I don't know if I would even trade that chart, or it just is crazy, how the candles. And this happens all the time. So I didn't feel bad.
Cable or intraday, unless you're trading much tighter time frames, I would kind of stay away from, to be honest with you.
Okay.
There are a lot of programs in cable, especially through the the close of the UK and the crossover between the UK and the US Open. There's a lot of messing around with pretty serious algos running through that pair then, which makes it trading pretty treacherous.
All right. The second occurrence was this one.
Yeah.
From here to here. Got the outside bar.
Nice.
And came down to that level.
Nice.
Pretty solid.
Yeah.
Even like without knowing the ADR, that probably would have been a winning trade.
Yeah.
Had this one. So from here,
yeah,
not there, but the second high,
yeah,
have that pin bar. It kind of does come up to retest.
Yeah.
So might have been kicked out on that trade, depending.
Yeah.
Again, actually, no, because if the entry's below, I would have never even entered until I got somewhere around a few pips below the close, or below the low. So I would have entered there, got down to the 23 with a 0, because that was a 61.8. That's the beginning. This was another question I had. This occasionally, because of like what I was talking about, like the two tests. Like for example, here sometimes like when it tests my level pretty well and it does the retest, it's a little bit like it goes up a little bit higher, not necessarily spot on the level.
Yeah.
Don't know if I would just avoid those trades altogether, or I would still enter in something like this, because in this case here, we got the divergence, pin bar, and
well, so I think what we've got to do there is, to my mind, that's a separate play. I think that's what you need to be. You'd have to compartmentalize that and say, look, I'm looking at a pin bar play with divergence in a certain zone, and that you'd have to run that as a separate strategy, to my mind.
Okay, that makes sense. Well, that's good to know. Just like to avoid not chase those things, even though they're not.
Yeah, because what we want to do is, we want to have a trade plan, and we want to be laser focused on executing that trade plan. So we don't want any wishy-washy scenarios whereby it's, could be this, could be that. We want something that this is what I'm looking for. It does this, and I press the button.
Okay.
Yeah.
Yeah, makes sense.
So I mean, we can, if you can certainly back test that pin bar divergence play, and you can get data on that, and then we can write that up as a separate strategy.
Okay. Yeah, I'm looking at zone. That would be a good idea. There's so many I'm trying to like get my eyes. So yeah, this one I believe was no divergence there, but on the next high that tests the 27.2, hits directly on the level, forms a pin bar.
Yeah.
At the level, it hits the line, so I would count that, and then that well exceeds the 23, and this goes quite the ways. Oh god, I gotta delete one of these. I'm trying to see. 1 second. Oh, this one hits the 27.2 of this small swing over here. Let's see. I didn't look necessarily at the candle, so I have to do this as we go. Oh god, I think it was this line. Could have entered at this pin bar, even though it was actually, I can tell. Looks like it closes right on a 38, so probably would avoid that candle. You're not really a valid candle entry on this one that I'm seeing, so
Yeah.
Probably would avoid that.
Yeah, I mean, it comes back to, you know, as I was saying, I think it was last week, that, you know, what we want to do is we want to focus on the setups that you just can't not take.
Yeah, you're right. Yeah.
Yeah. Because ultimately those are the ones that are going to work more often than not. Any one that you've got to convince yourself, just pass.
Yeah. Okay. That's, I had highlighted this one. This goes back to that swing. The 27.2, get a test.
Now here, so this is interesting. Look, so what I would say here is the swing you have drawn, yeah, is not actually the swing, is it? Because it makes another low, retraces. Doesn't?
Oh, gotcha. I see the one you're talking about. Yeah.
See what I'm saying?
Yeah.
I mean, it actually makes there's three pushes there. That it's actually the 4th of December is the swing.
Yeah. So you're right. Okay.
No. I'm talking about the bigger swing. So from the high, from the absolute high on the chart, there down to the 4th of December. That's actually the swing there, isn't it? Because then you get the retracement up into the 50% zone that sells off. Okay.
So that was the one thing I was like curious about. You know, like said maybe. Like for me, I guess in general, then it would be easier to just focus because, like, in the middle, there's like the smaller swings, and like lately, that's the ones that I've like all the occurrences I've drawn were on those inner swings, and I've never done any swings that are from like absolute highs to lows.
Right. Okay.
Could I maybe like would that be something I could just avoid? That I could just see I mean, I guess I could do it. I mean, I don't see why I would have to avoid it.
I mean, you want. Well, look. Here's another thing. You want to do. You know what sits best with your personality at the end of the day. All I'm saying is what we have to do is it has to be a repeatable process that ultimately becomes objective. Insofar as, you know, we're going to write down a bunch of rules, and those rules are going to define the entry at the end of the day. So, if you feel your eye is better trained or you know, it's better placed to pick these in swings, then that's fine. But that's what we're going to document, and that's what we're going to stick to.
Okay.
Yeah.
Yeah, that's why. Yeah, so that's why I was curious. Like with the one that I had initially drawn, like it never did had 100% retracement. So this is the main swing. Wouldn't this then like it? Like it, you can see because it doesn't really test any of the other levels besides the 27.2, and usually they work along the way too.
Sure.
But like I don't know. Like should I generally like not take this kind of setup then with so many in between?
Yeah, I don't think you can. I don't think statistically over time that will be valid, I don't think you'll be able to objectively measure that, because otherwise you're going to be in a position whereby you're picking the swing, and remember I said this to you last week. Your eye has a psychological default in that you will pick the setups that look like they work best, and you've got to factor against that natural bias. And this is part of the problem of backtesting manually, as you're going to have to do at this stage, is that your eye is going to automatically be drawn to the setups that work. So you really need to be cognizant of that as you go through the examples.
Okay. Yeah, that sounds good. On the way, this one did happen, but that candle is ridiculous, so I wouldn't have even traded that.
I mean, the other thing there is another measurement that you can get, and that is a what is it called? I think it's a true range indicator. And so what the true range indicator does is it doesn't measure the daily volatility, it measures the pip size of the last, let's say, 15 candles. And so where a candle hugely exceeds the average range of the last 15 increments, you can think to yourself, objectively, I'm going to pass on those because they, you know, they don't work.
Okay.
Do you see what I mean? I'll look that up for you. I think it's a true range. I'll come back to you.
My other question was, sometimes, like this look with this, like from the 27 to the 3.6, like sometimes a fair distance, and like I feel like on a couple occasions at least that I wouldn't even necessarily have to have the like a stop that's half that distance to like profit, and like I could even like what like can you imagine any scenarios where it would be I'll be able to get like a 1 to 3 just with like the way like the setup works? Sometimes it just seems like I don't need to have such a large stop, but I don't know. I have to maybe test it.
I mean, this is another thing. This is going to come down to testing. You'll have to, you know, once you've got, you know, we're looking at 20 examples here. Once you're looking at hundreds of examples and you've got the data entered into a spreadsheet, you'll be able to mine that data to get optimal settings.
Okay. Yeah. Okay, that makes sense. So is there like a format for this spreadsheet that you have? I'm not very familiar with Excel, so I've like never used it to its full.
What you can do, and this is what I would suggest you do, is you can export trade data from a MT4 account. So you can go to the terminal on your MT4, export the trade data, and wait a second, let me just think. There's actually some playback software where you can freeze each one, take the trade, and it produces trade data that you can then put into my FX book and mine the data through them. Let me come back to you on that as well.
Okay. This is the other very important question. So with this indicator, occasionally it doesn't give down signals between like the up signals, like on this case, like even up.
Yeah.
So in this, like, it's happened a couple times, and what I've done is I pick the last down signal, and then just go all the way through the up signals until one that precedes an actual downswing. So I'll go from here to here, and in that case, there's a 27 to I get that bullish pin bar right on the level at the 27. And bam. So I think that's a safe bet as far as I could take those.
Okay, well, look, I think what we need to do, I think what you need to do now is you need to write this up.
Okay.
So we need to start, you know, building a set of parameters, you know, trade logic. So you want to screenshot some of the very best setups you can see and document step by step what's required, both from an analytic perspective to identify the setup, and then what is required for you to pull the trigger.
Okay.
Then what you're going to do on trade management, you know, how you're going to manage your trade, manage the risk during the trade, and what is going to be your exit signal.
Okay. Yeah, so that was one thing I was curious about as far as like to be able to forward test it, I have to decide on those factors, but I thought I had to back test them to see which one was the best. Yeah, I'm just curious. I guess I would, maybe I can just pick one and then back test, and then if I see one,
well, you can. The other thing we can do during the forward test is you can run, you know, you can run multiple trade management strategies as we go forward.
That's true. Okay.
So you can enter two positions, manage one way and manage one the other.
Okay.
So, I mean,
that makes sense.
What you need to do is set up a couple of demo accounts, you see.
Yeah, I actually had to switch to a forex.com account because when I switched my computer, my AvaTrade demo was over.
What we need to do, which is very important, is you need to speak to the broker or speak to the customer service team and make sure that they'll extend your demo account for 3 months.
Okay. Is that the people who I'll be doing the real account with as Ava?
No, you won't be doing it with Ava, and we are just in the process. Actually, if you get a demo account with a company called TV Markets.
Is that it's TB as in boy? Or?
No, T for Victor. T Victor Markets.
Let me write that down. Okay.
We're just in negotiations with them. It looks like we'll move all the prop trading business to them. Okay.
Okay, that sounds good. So write it down. And you said you'll send me the ADR. Oh,
yeah, the true range indicator, and I will also look into this this walk forward software as well.
Okay, cool.
We can real time it.
Okay.
Yeah.
That sounds good.
Good stuff, Brandon. Good work. We're making solid progress here. You're in good shape.
Okay. And one last question. Would it be helpful now with the walk forward software? From what you remember, would it be helpful for me to find them now, or that would just be a waste of my time? Can I go way back when and start finding them to help input, or should I just wait?
Yeah, no, you should. I mean, definitely, you want to now that you've got you've got a broad idea of what it is you're looking at. Your time is well spent looking for more and more examples. Okay. And also then obviously looking, monitoring that, let's say just the majors for now, and looking at, identifying setups as they develop as well.
Okay.
Yeah.
Yeah, sounds good.
Good stuff, Brandon.
All right.
Speak to you soon.
Speak to you soon.